commercial vehicle industry, including Class 8 trucks, is seeing signs of growth, even though sales are below a year ago levels. Now, a leading supplier of cab-related products and systems for that market is winning contracts and continuing its global expansion. Joining us today on the Nasdaq CEO Series is the Chief Executive of Commercial Vehicle Group, Merv and Dunn. Mervin, welcome to the show.
Thank you, Carmen.
Well, good news. You just announced a nice deal in China, and we want to say congratulations on that. How important is China to your company's growth?
Well, China is a huge marketplace for us. In the U.S., our best year ever has been about 380,000 Class 8 units. In China, last year's Class 8 units were 1 million units. So when you look at the size, the potential over there, and we had no business in China for commercial trucks, Class 8 trucks, up until our last couple awards. One was with Photon, and then the latest one with JAC. So we're a newcomer to this market, but when you look at China overall for us, in 2005 we started out with basically $4 million worth of sales that we transferred over from one of our other foreign companies to supply into China to their companies. And today it's about $75 million, and as we projected in our Analyst Day, in 2016 we look for that to be around a $250 million country for us. So it's big numbers.
Well, as you said, you started there in 2005, and,
yes.
You're hoping to ramp up sales to about 12 to 15 million. How are...
No, we're ramping up sales by 2016 to be in the 250 million.
250, correction.
This
okay.
one contract that we just got on JAC is approximately in the $15 million range
okay, so
alone.
That's from that particular
yes.
contract.
Yes.
So, well, how are you growing? How are you expanding? What is it that is in your strategic operations and your vision that is allowing you to see this growth?
Well, when we first went to China, we were it's a wholly owned foreign entity. We have no partners. And what we went in for originally is developing, because our products are well known in KAB seating for construction equipment, and in CVG is a well-recognized name around the world in our products. And so as these companies want to continue to improve their quality and to be able to export as well as supply themselves in China, they want brands that are recognized around the world to go into their products, so they pick a company that has a leading quality and innovation and technology brand.
Well, that's very unusual to be able to go into China or Japan
yes.
Without a partner.
Right.
So you're saying it's because you are such a well-known entity in your market that they accepted you in that regard?
Well, they needed us, and we needed them, because it's an absolutely great place to, to sustain the growth of our company that we're trying, that we're achieving. And so for us to go over and be accepted, we had to go over and prove ourselves to start with. So for the first 2 or 3 years, our growth was very slow. We went from like 4 million to 15 million. And then from the 3 years on to the 10-year end, it went from 15 million to 75 million. And then 100 next year is our prediction or projection.
Got it. And
then by 2016, 250 million. It's been a hockey stick, because we've become very well accepted because we have performed. And, we're been awarded. They see what goes on in North America, too. They watch that very closely, because that's a market they want to be in. Mm-hmm. And, we were selected as the Platinum Award winner for Caterpillar, which I really don't know of many suppliers, and I've been in the business a long time, that are Platinum Award. And John Deere, we were Supplier of the Year last year. They're in these businesses, too. They want suppliers that have the ability of a household name
right,
type
somebody
of thing.
that they can rely on, know there's going to deliver. Now, your company, Commercial Vehicle Group, in 1999 was 100% sales in the U.S.
Yes.
And now you, after coming into the company, have taken that and created a global company in many geographical markets. And now you're looking at expanding into India, or you already are. And can you reproduce in those other markets the success, especially in India, what you've done in China? Now, China was organic growth.
Organic growth. China is 100% organic growth. India, we've done a joint venture which we own 90% of. We will be a strong acquirer in India also. And we feel that we're going to replicate in India what we have done in China, but at a faster rate, because in China we did nothing but do it organically. This way we're going to mine the organic growth, and we're also going to mine the opportunities for acquisition. And we think that in our planning period that India has the ability to be up in the 100 million range. So we have strong growth opportunities.
Okay, so you're a global company. You've got warehouses and distribution centers and manufacturing all over the world, including Europe. Are you concerned, or how concerned are you about the state of the global economic situation?
Well, I think, you know, you can look at it two ways. One, you can be concerned about it and worried about it, and the other is you can try to figure out how to take advantage of it. I obviously know there's nothing I can do about it, so my look is how to take advantage of it. The companies that are headquartered in these countries have a lot of high overhead structures, and they've got concerns. We in Europe are in low-cost countries,
such as the Czech Republic.
Such as Czech Republic, the Ukraine, and then we have some manufacturing operation in UK, in England. So for us, we think if we focus on going in, there's going to be a lot of companies over there that have established bases with some good, strong customers. Europe is loaded with strong customers like a Volkswagen, a Iveco, companies like C&H, and we want to be part of them at a faster rate and growth. So if there's opportunity to acquire in Europe that gives us potential for growth and it's an exceptional value, we're going to be all over it.
Let's talk about the share price. Now,
yes.
CVGI is down more than 50% from the January high.
Yes.
How are you dealing with that? Any ideas or ways that you can ramp up a share price? What are you saying?
Well, when it comes to share price, I have absolutely no control. And if someone could tell me how to control it and it was legal, I would do it. The only thing that my team and I can focus on is how to drive value for the stakeholders, which include the shareholders, but also includes the customers and the employees and the communities that we're in. So what we do is we put a strategic plan together, we update it every year, we adjust it if it needs to be adjusting, and we look for areas to grow to take the cyclicality out of our company. So we look to diversify. And we have put that strategic plan together, geographic, innovative, people, the whole thing, and that's what we drive our company to.
Okay, so Credit Suisse just initiated coverage. Robert W. Baird has already been covering, and they both have neutral ratings on the stock. Are you comfortable with that?
Well, I have no choice but to be comfortable with it. Do I like it? No. So, you know, when you look at that, you go, well, what can I do? And our analyst day that we did today is part of the reason for doing that is to educate the investors on what our company really is. Don't lump me in the barrel with everybody else. I want a premium for my company because of the way that we have performed. We've got 13 quarters in a row with operating margin improvements. We're no longer 100% Class 8. We're no longer 100% U.S. We are diversified. We're in 9 countries. We're a diversified product portfolio. We're no longer a contract manufacturer. We have highly engineered products, and I want a premium for it. Right. So I've got to get out and tell people about my company. Okay.
Well, as we wrap up now, then I'm going to give you the opportunity to tell us, what do you see for the future for Commercial Vehicle Group?
Well, we laid out today that by 2016, our projections of where we want to be as a company is around on the revenue line is $1.6 billion. We want to keep diversifying. We want our strong growth in emerging markets. When you look at the commercial vehicle, 55% of the world's commercial vehicles are built in Asia. So obviously our
So
growth.
definitely you need to be in business over there.
We need to be in business there. We're an American company. We plan on being in business in America.
Okay.
You know, there's no greater place in the world to be than in America. And we're going to grow. We're not going to desert and turn our back on where we started. And we're going to continue our march down the road of being the best quality, the best innovator, the technology, and most of all, supply to the customer. If you take truck seats, for example, in the U.S., the truck driver can pick and tell the truck OEM what seat he wants in his truck. Over 90% of the truck drivers that spec their seats in, spec my seats in.
Well, that's definitely a vote of approval and a nice note to end things on, Merv.
Thank you so much for the opportunity to talk.
It's been a pleasure. There's so much more we could have talked about. Maybe next time.
Well, we've got plenty of time.
Okay.
I'm always here.
All right. Very
Thank
good.
you.
So our guest today on the Nasdaq CEO Signature Series has been Merv Dunn. He's the president and CEO of Commercial Vehicle Group. I'm Carmen Roberts. I want to thank you for watching.